All right, we are ripping and just busting through levels left and right. Kevin Green taking a look at how quick the market makers are reacting here. I mean, are we just sliding all the calls up? What's going on, KG?
Yeah, we continue to see a lot of this rolling activity taking place here, Oliver. I mean, we've had a stair-step type of momentum over the last couple of trading sessions, which is good and which is also bullish for now. Now, we are going to be approaching a really key area of resistance at 55.50 on the open interest side. So that's going to be the first area to be mindful of. Now, if we actually did see resistance and had a little bit of a pullback, I wouldn't get too concerned about this. I mean, if you're looking at the moves from the lows of Monday of last week to where we are at right now, even if you had a 38% retracement back just from a Fibonacci standpoint, you still would be looking at around 5,400, which is not bad at all. And you're not having a lot of put activity taking place. Now, I just checked. We did see some buyers of the 5,500 puts for tomorrow, but tomorrow's expiration Friday. It's the monthly expiration. We could see a little bit of fireworks. There might be some hedging activity that is taking place, but this is the distribution that we've been missing for the last 3 weeks, where we are now starting to fill this out. We are now in positive gamma territory, which means that dealers, if we do have this upside momentum move, we could actually see dealers starting to compress markets. And when we have compressed markets, we also have compressed volatility. You can see that within the VIX. We do not really want to break lower and kind of retrace a lot of this move to the downside, because that'll put us in the negative gamma territory. But basically positive gamma territory right now. That's ultimately bullish. Let's see if we can hold these levels. If we can continue to crack this thing higher, maybe even hit 5,600 by the end of the week. That would be tomorrow, which would be a pretty decent feat, to say the least. I would say that we could be in the cards, or it could be in the cards that we could hit all-time highs here, maybe by next week, if this momentum continues.
Yeah, this looks like a lot more normal of a distribution curve now. It really seems like things, you've kind of got still that sort of tail lingering off down there on the put side, but everything kind of shifting in a hurry upwards. So at this point, a big pullback would be a major shocker, it kind of seems like.
Yeah, definitely. And actually, if we could bring up the open interest chart, I highlighted a couple of key areas to kind of focus on just moving forward. Now, for the upside, 5,500, kind of 55.50, I'm sorry, is the one that we want to look at here in the near term. That's your near area of resistance, or that positive dealer gamma. 5,600 is going to be your golden zone here if you are a bull. But even if we see that move to the downside, once again, I put some Fibonacci retracement levels. The blue line is the 38% retracement level, sitting at around 5,400. That would be healthy in this type of reaction, or this type of turnaround in such a quick fashion. Even if you got to the 50% retracement, that would bring us down to 53.50, give or take a couple of points there. That's also still bullish in nature from a technical standpoint. Once you break below that 50% retracement from those lows that we saw last week, that's where you would get a little bit concerned. Notice that 38.2% retracement level, which is sitting right above that negative gamma level at 5,400. So that's what to keep your eye out on if you're looking at it from the downside. Upside 55.50, and then 5,600. And then once we break through 5,600, you're looking at darn near all-time highs, which would be out of the ordinary in an August and September type of time frame, because that's usually when we see higher volatility. But if the market's going to try to plan this thing out and wants to continue to move higher, who's going to really stop it outside of any type of economic data that kind of changes this narrative over the last 48 hours that's been kind of soft landing?
Okay. The last 24 hours has been about as good as you could ask for. Now then, if we do, so your point basically, we kind of get through the next threshold and your target's basically the all-time highs. If we don't, if things turn around, then obviously there'd be some pretty serious offsides within the market right now, some of these big institutions, it seems like, but they've also still got a little bit down there left. So it'd have to take like a pretty big drop as well.
Yeah, well, we haven't seen a matching from the upside rollouts and calls compared to the downside hedging and puts. So the puts haven't been rolling up as aggressively. So we have, once again, this kind of spread out type of scenario where it gives yourself a little bit of wiggle room, and dealers don't have to really intervene to the downside if we see aggressive selling, rather than these upside moves where we break through upside levels. That's when you can have this, gamma squeeze scenario kind of taking place. So I think you're correct there. But the put side we haven't seen any type of aggressive put action taking place over the last 3 trading sessions. And
Exactly.
if it remains like that, that's bullish.
Okay. All right. Now, what about like getting stuck? Do we have so much momentum that that's unlikely at this point? If the skew is kind of bending upward at this level, does that generally kind of limit the potential that we just grind, or is that just, we'll see and wait and watch?
Well, so from a healthy, more technical standpoint, you kind of want to grind it out a little bit. I mean, the velocity of these moves, especially if you're looking at today's move, I mean, we broke up and then just continue to this move higher here. Actually, if you're looking at a trend line and you compare trend lines over the last 3 trading sessions, it's getting more and more aggressive to the upside as far as that angle. And so you start to question the sustainability of a move like this. And so what you would like to see is maybe a continued grind higher, but not as aggressive. Maybe we have these 25, 35 point days where we grind to the upside here. Once again, negative or positive gamma territory, you're also going to have compression. So compression just means that once we hit upside dealer gamma levels, positive dealer gamma levels, dealers start to sell to compress volatility. And then when we have the test of lower negative gamma levels, dealers start to buy. And so that's what we kind of want. We want this gradual movement to the upside after this violent swing that we've seen over the last 2 weeks. That will provide you sustainability. This continued move to the upside may also, and we don't have the volume to back it up. We're starting to get volume and liquidity back in, but if you don't have the volume to back it up, then you could have a lot of technicians really questioning from an auction theory standpoint, the sustainability of these price levels.
Okay, all right. So up, obviously nice, but sideways just fine after we got here this quickly. Okay, anything else? Any VIX stuff?
Yeah.
Hit me.
Yeah, real quick. Let's hit two real quick charts.
Okay.
Going into the close here today, the volume chart that we had out there, I wanted to highlight a couple of areas. 5540 is our positive gamma area, so that's where we're seeing a little bit of resistance. And actually, pretty much for the last hour, maybe hour and a half, the technical chart technical chart, the hour and a half, we've been kind of hitting that level for a considerable amount of time. And then we have seen some buyers kind of stepping into the 5545, 5550 call spread. That happened about an hour ago. And so if we're going to see this long shot or moonshot type of trade, 5550 could be your area where we do close at. That would be a long shot trade because they placed that about 2 hours ago. I saw it about an hour ago.
It means they're putting it on intraday, putting a little pressure on into the close.
Yeah, and if we do see a reversal, your balance area is 55.17. So that's something to keep in mind. But this is ultimately bullish. And then last but not least, we do have liquidity coming back into the market over the last 2 to 3 trading sessions. We're starting to see the bid-ask spreads on the E-mini S&P 500 futures starting to get a little bit more thick. Now, they're not where we were at about a month ago, but it's in the right trajectory. And that's the exact trajectory you want to see for a bull market to continue this rally here. Spreads getting lower and lower, liquidity starting to broaden out.
Okay, this is from the CME. So we want both these lines to trend higher generally in magnitude, so we know there's more liquidity.
Exactly. So that shows you book depth. It's the average bid and average ask size. So last week we were sitting at
super thin.
12 people on the bid, 12 people on the ask. If you're looking at earlier this month, it was 65 to 70 on the bid, 65 to 70 on the ask. We're in the right direction. We're sitting at around 23 right now. This continued expansion of that graph, if you will, or that distribution just shows you that more liquidity is coming back in. That's ultimately bullish once again.
That's a cool visual. I like that chart because it really shows you how much strain there was when you get that pinch in the liquidity on both sides. So, all right, winding back out, participation, call buyers, putting in some orders before the close. Maybe we get a little extra. Thank you, Mr. Kevin Green. Good stuff. KG pulling us up.